Hey, good morning, everybody. Welcome back to Coffee Sometimes Tea with Marcello and Jen. Jen's actually doing some background work there, so she'll be in shortly with some videos as well. But we just want to continue our series on credit with you guys and ChatGPT-4. We're using ChatGPT-4 in these series, so we can show you how to use ChatGPT for your business. We picked credit, everything all about credit, just so it was easier for everybody to kind of comprehend what's going on, since it is a huge thorn in society's side now is credit, right? So again, we're using ChatGPT 4, which is a paid version. It's $20 a month. It's not too crazy, so I think that anybody and everybody should be okay with that. So again, today we're going to be using ChatGPT 4, okay? Asking it as a financial credit expert, okay? The following advanced credit strategies and leveraging your credit, right? So let's get on to it, and we'll check it out. We'll let it do its thing while I have my cup of Joe here. Right on. So let's jump right on, you guys. So as a financial and credit expert working, so that's what they're with credit bureaus. This is what ChatGPT pulled up. Now, mind you guys, we're not credit people. We're not 100% endorsing anybody or anything. We're just letting you know what ChatGPT pulls up, okay? So advanced credit strategies involved methods, right? This is the message. So here's some sophisticated techniques. So credit piggybacking, credit mix optimization, and strategic credit utilization. Okay, what is that? What's credit piggybacking? So it involves becoming an authorized user on another person's account, basically is what that is. So ideally someone that's a long history that can boost that credit score. So let's say on that, I mean, it's just like a co-borrower, co-buyer when you buy a car. They're leveraging that person's credit and averaging out how much they make to boost your guys' score. But now that person is taking on your debt. So if you fault or if you do anything bad, it goes on to that person as well. So we want to be careful with credit piggybacking, okay? So credit mixed optimization. That's where lenders like to see a mix of a whole bunch of credit cards on the report, such as revolving, which are credit cards, installment loans, which are auto loans, personal loans, or mortgages, and demonstrating that you can handle different types of credit responsibility, okay? That will positively affect your score in the positive way. If you want to raise it up, that would be just stay stat on all those. Don't be late and keep it straight on that. Strategic credit utilization. So keeping your credit utilization ratio. Here we talked about the ratio on a couple videos that in the past. So the amount of credit that you're using compared to what your limit is. Actually, that below 30 is a little bit lower than that. Right there, you want to stay at 10. Okay, 10% and below is where you want to be at for your credit U, is what they call. That's in, especially when you're looking to get business credit, guys. So we'll dive deeper into that in a different video, but you want to stay below 10. Okay, 10% is where you want to be, or below in the utilization. And we'll show you how to do the whole spreadsheet and everything on how that rolls. So leveraging your credit for financial health. Okay. Balance transfer cards, credit builder loans, and reward and benefit. So we talked about the credit builder loans. That's designed to help people with no credit or bad credit to build a positive credit history. So the money you borrow is held in an account separate. Then you make some payments. And once that loan is paid off, you get access to the funds. Okay. Balance transfer card. So this is a huge one too. Discover does a really good job on this. We'll dive deeper into that later. But they have that 0% for a year, whatever, or a couple months to transfer and then pay it off at zero interest. So you want to look at those. Some cards have a lower interest rate. Let's say your credit card has a 29%, and you've got another credit card that's at like 10 or 15. You want to transfer all that money onto that card, let that card eat it up, and then just pay it off. So at least you have that card that you're emptied out on. I'd leave that aside. start making payments to the card that has the 15% on it instead of the 30%. The rewards and benefits. By using a credit card that offers a cashback point system for traveling, a point system for hotels, cars, that kind of stuff, is huge. Now, cashback is something really big too, because you can just deposit that money and pay it off the card. So they give you points, you take the money and pay it off. Now, this is the thing though. So the strategy requires discipline to pay off balances in full each month. Okay. That's to avoid that interest charge. So this is really here is really big. But you guys understand this. However, the strategy requires discipline, okay, to pay off the balances each month to avoid the interest charges that could negate the reward, basically. So you may earn all these rewards. If you don't pay it off in a certain time, all that goes back away. Okay. So be mindful of that. So understanding hard versus soft inquiries. Okay. This is when it comes to, you want to ask, you can always ask the credit card too, company. Do you guys do a hard pull or soft pull? A hard pull, which is a hard inquiry, they occur when the lender checks your credit report for like a lending decision for like a house, a car, any type of personal loan, that kind of stuff is a hard inquiry. It'll temporarily lower your score, a few points, and it can remain on there for 2 years, but, it diminishes over time. So you want to ask for soft inquiries. That's what we want to be at, soft. Okay. They happen when a person, same thing, it runs your credit card and as a background check as well. Like if you own a credit, or like when you check your own credit, with a credit card issuer, they check credits pre-approval. That's all soft pulls, you guys. You want to see call them up and ask them, hey, do you guys do a hard or soft? If they do a soft pull, run with it. Hard pull, just be careful. We want as many soft inquiries as you can. You don't want you want to stay away from the hard inquiries. So, and then here, managing hard inquiries is part of an advanced credit strategy. So while occasional hard inquiries are normal to many, in a short period can be a risky behavior by lenders as well, because it may affect you guys in the future when you're trying to purchase something. So in summary, basically, advanced credit management involves strategic actions, okay, beyond basic credit practices. So leveraging credit to improve financial health, okay, and understanding the nuances, of credit inquiries. So by employing these strategies wisely, right, you guys can enhance the credit profile that will take you to a different level. I promise you that's something that you guys need to take care of when you're young, old, it doesn't matter. You want to keep that credit clean and you want to keep it nice and scrubbed. Okay. So, just keep in mind everything we talked about here today. We're going to go talk about it in our school. It's our private community that we brought like-minded people with to talk about their businesses and how we can improve their lives and business, personal and business, with AI. We're trying to make everybody aware, not be afraid of AI. So that's the main focus of Coffee Sometimes Tea, and of course drinking coffee. So again, you guys, cheers to you guys. You guys have a amazing day. Actually, you don't put your cup down. So cheers. Have a sip. Amazing. Have an amazing day, guys, and we'll get with you next one.